Hi, welcome back to the channel. Now, in this month's analysis, I'm going to walk through a really high level, broader market overview. I'll get into all of the major indexes and asset classes. I'll cover a lot of mega cap tech, possible rotations, and I also have around 20 individual stock ideas for your watch lists going into May. Now, it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. Now, for those of you that are new and just stumbled onto my work, hopefully the Scottish accent isn't too difficult to understand. But before I get into the charts, the market over the last month has been really good after the recent mini correction that we had. If you've been working with my charts over the last few months, hopefully my work last month helped you to buy the exact bottom in the market. From the charts provided in last month's analysis, the performance probably speaks for itself. We're now starting to see a lot of the early signs of another potential rotation, so I'll be covering that this month for you as well. And with everybody complaining about AI and Nvidia bubbles, I'll be covering that this month also. But one thing I will say is the way that I learned it is that the best players really should be scoring the most points, especially when we're factoring in all of the big moves that we've had with many of the mega cap tech names. But for disclosure, myself or our clients may hold positions in some of the names mentioned, but I have highlighted those disclosures on the charts for you. If you are new to the channel, I like to use a combination of technicals and fundamentals. I'm a huge advocate of systematic process. Most of you already know I don't use the magical Harry Hindsight indicator. I timestamp absolutely everything, which is massively important. I'm one of the very few who go on the record with their work. I'm told my work's for everyone. If you are an everyday investor, if you're a trader, an options trader, financial advisor or a money manager, it probably will fit for you. But my work isn't geared towards buy and hold forever, unfortunately. I'm really looking for structural trends that will last weeks to months. I like to use logical targets and price levels. If we sat down and had a beer together, I'd tell you that I'm personally more of a technical investor, but my work does apply to most styles. My clients tell me that my work's of the highest quality, so I do hope you find a lot of value, and I do have a lot of clients at most of the major investment banks now also. But please do pause the video, pause for a very important disclaimer, and before you kick on, please do smash the like button and subscribe. It does help with the YouTube algorithm and really does help to get my work a lot more noticed. Now, what I will say before I get into this analysis is I am recording this around 45 minutes before the market close on Friday. It has been a very choppy, very sloppy week, but I will get into the charts just to kind of give a little bit of technical context to that. But let's kick off with the NYSE Composite Index. Now, I know there's many of you, and I battle with my clients this all the time, that use the S&P 500, you use the triple Qs. I like to use the chart that is driving market direction at the moment at any particular given time. Now, if you picked up last month's analysis, which I will link at the end of today's video, the NYSE composite chart was the chart that helped me to identify the tradable market bottom. The reason I like to use the NYSE composite is very, very simple. It just has more stocks than a basket of 100 or 500 if you like the Dow, which is valid as well at the moment, 30 stocks. I like to use a broader view of the market. Now, the NYSE composite for me is very range bound at the moment. It's really a buy low, sell high environment. That's the cards that we're being dealt at the moment. A lot of folks are calling for corrections and crashes. I'm not really seeing that in the charts at the moment. I'm just seeing a very range bound market. The breadth data that we can see over the last couple of weeks now, like I said, this breadth data has not updated yet, but we can see that there are more advances than declines. So there is something for everybody at the moment. but we are currently range bound. The S&P 500, again, one of the charts from last month, just highlighting that the 5,000 round number would hopefully act as support on the pullback. That's exactly what we've had. For me, I'm still looking for stocks to buy. I've communicated as much to our clients in our weekend client work, and that's really the lens that I'm currently viewing at the market. The shorter term time frame for the S&P 500, again, I'm not trying to overcomplicate things. I think where a lot of especially retail investors really struggle is second guessing every 1 or 2% move in the S&P 500, and I get it. I used to be the same way. But when you just kind of take a step back and just build in, the very key support levels in the market and understand that, it's very, very normal for price to pull back and retest and then move off again. That's really how uptrends work. I'm viewing the recent mini correction that we had a couple of months ago as the pullback, the buyable bottom, the tradable low, whatever you want to call it. And I'm really just looking at this through the lens that this is now going to be resistance turning into support, and I am hoping for the month of June for the uptrend to simply continue. It's really the same message with the triple Qs. Yes, I understand this week hasn't been a great week. It has been very, very sloppy for the market. You just need to look at the Dow, which is currently pulling back a little bit. But again, as long as the triple Qs are trading above these key Fibonacci levels, then again, I'm still looking at it as a tradable, buyable low. So, take with that information what you will. The Russell 2000, now if we step back and we observe the longer term chart for the Russell 2000, some of you might have picked up my weekly letter a couple of weeks ago with Stan Druckenmiller's best 13F holdings charts. IWM was one of the charts in there. He has I believe a $600 million call option bet on the Russell 2000. So I think what he's seeing the same thing that I am, in that the Russell 2000 is the catch-up trade potentially for the second half of the year. I am patiently waiting for this microcap chart to break out as well. Again, if you follow my channel and follow me on social media, you'll know that I've been waiting months and months for these breakouts to develop. We're right there again, very, very close. I think the AVWAP levels from the COVID low. I think if we can get a breakout in both the microcaps and the Russell 2000, then I think it's probably risk on for the riskiest stocks. And I think that's the potential catch-up trade, like I said. Now, one of the things that I wanted to touch on as well is the VIX. Now, the VIX is very useful, and the credit spreads, which has been added to this chart as well, is incredibly useful. For those of you that are perhaps trying to learn more about the VIX, just to explain, how professionals like myself use the VIX, it's really, we're looking for confirmation. So we know that the VIX spikes, we all get it. But one of the things that you want to see, and it's usually one will lead the other, credit spreads will often spike before the VIX, vice versa. You never really know what happens, but it's when they both confirm together that's really a warning signal. And for those of you, again, looking back at last month's analysis, you'll know that I was highlighting that there wasn't the confirmation in credit spreads that we were seeing with the spike in volatility. And ultimately what we got with the VIX was our standard spike, shakes a lot of the weak hands out the market, and then of course what happens is you get the buyable low, and then you look at credit spreads that just never confirmed the move in the VIX. And again, that's something that I've helped our clients with over the last couple of months. The VIX, as it currently stands at the moment, is still within what I would deem to be the green zone. So we are printing 13 at the moment. So, the VIX is still being suppressed at the moment. So again, this is an environment where, pullbacks can generally be bought, in my opinion. And also when we look to things like the 10-year note, and we were obviously assessing the bond market as well. Price at the moment for the bond market is really in the middle of no man's land. I think that there's a lot of folks out there that are trying to make calls at the moment in which direction we're likely to go. The way that I view it at the moment is, well, I made a call on the top in rates back in October. We had a 20% spike. This is a support level dating back to 2000 in TLT. We had a 20% move higher off the lows, and now we're just trading in the middle of no man's land. And really what I've said to our clients over the last couple of weeks is, in order to have any kind of real conviction in a bullish bond thesis, I'm assuming TLT is the vehicle of choice for most of you. In order for it to start to build the right hand side of the base, I think it needs to take out that 93 level. I think this is a very logical support and resistance level. There has been a little bit of a rebound as the week has gone on. So if we do start to take out 93, I think we're then starting to base again and probably go towards that $99 level. But honestly, at the moment, no real conviction in which way it goes from here. But above 93, I'd certainly have a lot higher conviction. Obviously, the precious metals market, the gold market, silver, copper has been absolutely wild over the last couple of months. I hope many of you have done well on the moves in copper, but the gold chart again is holding above that 2100 level. We are still working with logical upside targets there around 3200. Now, before I get into all of these individual stocks, if you're still here, it tells me that you're getting a lot of value from my work. Please do hit the like button. Like I said a few minutes ago, it does help with the YouTube algorithm. It really does help to get my work a lot more noticed as well. Now, the best place I think to start off here is with Nvidia. Now, not a day goes by where I don't get some kind of message or email or client request about when is the top coming in for Nvidia. Now, something that I just want to touch on with the chart, and just for disclosure, this is a current high conviction idea that I've got with our clients. It's been in place since the tradable market low, but it has broken out on the back of really strong earnings once again. Now, I think for a lot of the Nvidia perma bears, I get it, it's the run it's had makes sense. It has to have a bit of a pullback. But something I've been walking through with our clients over the last few weeks is actually, and as crazy as this sounds, as the stock price is appreciating, we're also getting the revenue supporting. So the revenue that Nvidia is posting is climbing along with price, but that's not the key thing here. As the stock price is rising, we're also seeing that it's getting cheaper as well. So the PE ratio with Nvidia is actually declining the higher the stock price goes, which is crazy. For me, I'm fully expecting Nvidia to be the highest market cap in the world sometime very, very soon. I'm sure there's many of us that are in the same boat there. But I just want to touch on those two fundamental metrics, because I think that there's a lot of misconception about what's actually happening with Nvidia. I don't think a lot of people are highlighting this. I've seen, certainly I posted this chart to social media during the week, and then I've seen that a bigger Twitter account ripped off my chart and posted it for their own followers. So it's something that I've noticed, and I do fully expect some kind of pullback, maybe to the recent breakout level, perhaps around 950, 1,000. I would consider that to be a healthy pullback, which will likely be buyable, provided the market isn't, of course, falling off a cliff. Now, Apple made a big bottom call on this one last month, so I just wanted to update the chart. The The price is currently struggling here around that 192 level. I think if there's a breakout above that 192 level, then there is another few percentage points in there. The relative strength has been rising off the lows as well, so all those professional relative strength gurus, all the CMTs that are constantly telling everybody to only buy all-time highs, I think it's the dumbest thing in the world. For me, I'm very much looking at stocks like Apple for buy low, sell high opportunities. The Apple chart has played out to an absolute T, and we are ultimately hoping to see previous all-time highs tested around 198. Amazon is struggling. I actually had this prepped a little earlier, thinking that it was potentially going to break out, but as the day has gone on today, obviously we're seeing a bit of toing and froing with mega cap tech. Amazon is being hit a little bit at the moment. The level that it needs to take out is 190. Above 190, I think it then brings in logical upside Fibonacci targets, which the chart shows has a lot of merit for this particular chart, around 223. Now, Palantir is an interesting one. It is outperforming the market year to date. I'm always looking for stocks that are outperforming the market. It has been very messy, very range bound for the last few months. For disclosure, I personally own this stock. And I have shared this chart in the last few weeks with our clients as a buy low, sell high opportunity. Now, it has taken a couple of weeks to really start to kind of get any moves in the stock price. But during the week, there has been a little bit of a catalyst with news, with new contracts, etc. being announced by Alex Karp. So I am hopeful that perhaps Palantir is starting to kind of put in some kind of tradable low here. And I'm working with upside objectives here around 25. But please understand that I do also work with systematic process. So I like basic tools like trailing stop losses, and our systematic process is already up at around $20 as well. Tesla, very controversial one. Again, I get it. There are, and I've got one or two other motor companies prepped today for you as well. But again, if you go back to last month's analysis, I was really just highlighting that I think there was a tradable bottom with Tesla. Huge buying volume came in. Now, since then, it has been very, very choppy over the last couple of weeks, again reflecting the broader market. But for this particular chart, the technical analysis, I think the 100-day moving average looks to be a significant level for this particular chart, and we are very, very close. I think if we take out the 100-day moving average, again, I'd probably expect to go and test the 205 level, but understand that the hope that I have for Tesla is it's not just 200, 205. I'd like to see this really start to kind of get some kind of momentum, but I get the bear case as well. Netflix, very, very close to our target. We are still working with upside targets around 700. Again, I covered this chart a few weeks ago in last month's analysis. Buy low, sell high. We're looking at 700 as the ultimate objective. Very, very similar with Spotify. Spotify, I think if it can take out the levels here around 310, that's a level dating back to November 2021. We'd then be working with previous all-time highs as our best case scenario. Micron Technology, monster base breakout of a 20-year base over the last couple of months. Again, I covered this one last month, and it's ultimately done exactly what I hoped. We are working with first targets there around 156. Now, General Motors is obviously quite interesting. It's massively outperforming. Now, just to highlight and bring into focus this area down here, this is what relative comparison. So all I've done here is just, this is a chart that compares General Motors directly with Tesla. As this line is rising, it tells me that General Motors is outperforming Tesla. It's doing it to the tune of 77% year to date, so no surprises. General Motors has been in an uptrend, Tesla's been in a downtrend, so there's a massive discrepancy, but very, very close to breaking out. I think the level there is around $47. We've got CNX Resources putting in a monster breakout in the last week. We're working with upside targets here around 33. This is actually one of my premium charts that I'm sharing with our clients this weekend as well. Uber. Now, Uber is really at a key level here. Now, I thought about perhaps taking it out of the analysis just because it's very, very tight as to whether it's just going to collapse here. But we are testing these February 2021 levels. I think if there's a definitive bounce here in the next couple of weeks, then it could be a buyable low. But you need to be very, very careful, because if it does break below these levels, then you start to kind of get into a bit of a mess. I don't like to short stocks. I don't like to short the stocks, especially when the market's in a bull market. So maybe something, just to highlight, and I do have a couple of examples actually prepped as well. So when a stock breaks down, for me in a bull market, I'm not looking to short anything, but what I do like to do is just add the chart to my watch list and look for a potential, what I call a bear trap or a failed move. And then what ultimately happens is you get the move here that suckers in all the short positions, and then before you know it, they're getting squeezed and then it rips higher. So that's something maybe to look for in Uber over the month of June. We've got massive 3.5 year pattern for Trade Desk potentially developing. It does look like it's been chopping about over the last couple of weeks, again mirroring the market, but I think if it can take out that level around 95, then potentially there could be some juice to squeeze there. Goldman Sachs has broken out over the last few weeks to new all-time highs. We have SoFi, potentially a buy low, sell high chart. Now, I actually had this in the analysis last month as well, just highlighting that this might be one to consider after earnings in case it breaks out above $8. Ultimately, it's had a massive pullback on those earnings, and it has pulled back to a support level here. So I've actually put this to our clients as a potential buy low opportunity, but again, very, very risky. I think with a lot of the kind of growthier names at the moment, it's probably not escaped everyone's attention that a lot of the tech names, the cloud names, the software names, quite a lot of them are being taken to the woodshed on the back of lukewarm earnings. So this might take a little bit of time to develop, but I think with SoFi, I think as long as you can define the risk, which is absolutely key with those kind of high beta names. ON Holdings, now retail, stocks are getting a lot of crap thrown their way at the moment, and I get it, but there are some retail stocks, if you look at something like Nike, which is in a massive downtrend, you've obviously got ON Holdings, competitor for Nike, obviously taking market share. If you have a look at the fundamentals for ON, you'll see that very, very similar to Nvidia, that the revenues are steadily increasing, and so from a fundamental perspective, there's a lot of growth going on with ON. Now, will it last forever? Probably not. I'm sure we've all seen what's happened with stocks like Canada Goose, etc. A lot of stocks, they come and go. So at the moment, ON is in fashion. The stock price is appreciating. It's been a long of hours since 37.50. It's been in our Trade Ideas chart book, and ultimately we are working with upside targets, hopefully around $55. Same with Crocs. Again, I'm not going to get into the fashion of Crocs at all. It's not for me. I'm a Jordans guy, but I think with something like Crocs, again, looking for stocks that are going up rather than stocks that are going down. I know over time something like Nike is going to be a great investment, for those of you that are dollar cost averaging. But I think for stocks that are, you're looking for that move higher. I think something like Crocs, looks very, very similar to ON. Now Dell has got a lot of airtime over the last, let's call it the last year. It's been on a parabolic move. Now, for disclosure, we've been covering this for our clients since $45. It has met upside objectives this week, but it has sold off. There's been a massive earnings massacre, which I think was probably due at some point. I think, it stands to reason that at some point when you get parabolic moves like Dell, you're going to have that holy shit, it's collapsed overnight moment at some point. We've got it this week. But today, a lot of our clients have been asking about potential buy the dip levels. That's a 10-week moving average. There looks to be a little bit of a rebound intraday today from that level, but I think it probably needs to kind of get a little bit of time to work, see what the analyst upgrades, downgrades look like over the next week, etc. But I think looking at the earnings numbers, I'm quite happy with the Dell earnings. Might be a buyable dip opportunity, but the chart is very, very what's the word I'm looking for? It's in the middle of no man's land at the moment, but you could use that 10-week moving average as a risk management level. Tractor Supply Company, I covered this one last month. Again, not the sexiest name out there, but we are looking at low PE ratios, earnings growth, price to sales, but this is the number here, short interest nearly 8%, and it does look like shorts are being squeezed with the stock at all-time highs. Organon, again, covered this one last month as a recommended buy at $19. It was included in the YouTube analysis as well, the May outlook. But it has pulled back to logical levels. Like I said, I like to use systematic process. It's not a fluke that price has rebounded from this level. So I'm hoping to see $20 act as the new floor for price and for the dip to ultimately get bought up. TKO Group Holdings. Now, for those of you that don't know, this is the WWE, this is a UFC. Again, it's one of our high conviction ideas at the moment. Is working really well. We are working with upside targets around 116, around 118. We've got Tencent Music now. Looking at what's happened with emerging markets in China over the last couple of weeks especially, just when you think China's bottomed, and it has bottomed, but just when you think that you're going to start to get these really nice smooth uptrends, what do China go and do? They go and circle Taiwan. Market's taken a massive shit, and there are some names within the China, the Chinese atmosphere, if that's the word I'm looking for. But anyway, Tencent Music, massive uptrend over the last few months, and hoping to see some kind of rebound from these very logical levels. But what I would say, and this is something that I've added to our chart book this week because we have been covering it since $10 for our clients, just to keep an eye on K-Web and emerging markets, just for some kind of tradable signal there that will give the confidence to maybe get into new positions with TME or add to existing winning positions. We've got Royal Caribbean, again, breaking out to new all-time highs. We are working with Fibonacci levels up around $217. We've got Alcoa Corp. Now, this might not be a name that you're familiar with. It has been a name that we've been bullish on since $34. We're up at 44 already over the last couple of months. It is working away nicely, but again, very, very similar to the tractor company. It has a solid 8% short interest as well. So, as the stock price is going up, there's shorts that are being squeezed, and that's probably what's driving the price. Ultimately, we have been working with these numbers, and ultimately we'll see how far it wants to go. And just to go back to what I was saying about the failed breakdown move, that I like very, very much. The AI stock obviously reported earnings this week, massively positive reaction. But again, short squeeze candidate, we've got 26% short interest. Now, I'm not going to get into the fundamentals of this particular company. I'm not massively clued up. For me, purely, it was a technical chart idea. And we are working with around $33, but this is a really good example of what I'm talking about. And when stocks break down, instead of shorting them, adding them to the potential short squeeze list, and then hopefully they can get moving. And that's ultimately what C3 AI has done here. But if you are still here, obviously it tells me that you've had a lot of value, so please do again hit the like button, share, subscribe, share with your followers. But if you're wondering who I am and what it is I do, please do jump on to our website at honeystocks.com. Our transparent timestamp work is all laid out. I only use my own charts and data. We provide memberships to all of our premium work, which includes all of our premium weekend analysis every single weekend, with all of our best charts and our weekend hot list. We provide all of our highest conviction investment ideas. I'll show you what that looks like in just a second. It also includes access to our midweek halftime analysis, which goes out every single Wednesday. We also provide access to a wonderful community of professionals, investors and traders from all over the world. We provide access to all of our chart books, which covers all the stocks, ETFs and the commodities from all across the world. And if you're new to technical analysis and want to learn more about systematic process, etc., I also provide access to our complete technical analysis program, which I'm told is very, very good. But just to show you what our high conviction ideas look like, this is the recent idea that went out for NVIDIA. As you'll see, very clear instructions, very clear chart. TKO Holdings, again, touched on that just a few minutes ago. Coinbase, which was massive gainer. Spotify recently met upside targets. We've got Valero Energy, which was massive. Tesla, again, looking for these buy low opportunities. Capitulation, that was a monster gainer as well. Meta, massive gainer. But I am very, very unique in what I do. I log all of our high conviction ideas on our website for complete transparency, so you can go on and you can see what our high conviction ideas look like, how those stocks have then gone on to perform. I have done this for the last 6 years, so please do go and check that out. I don't recommend penny stocks or pump and dumps. It's all high quality names. But I think my work is a good fit for anyone that has a mid-term approach. I think if you're looking weeks to months out, I think if you are sick and tired of day trading, you can't make day trading work. I think if you are looking to learn about systematic process, you want to have access to a professional analyst every single day. Maybe you're just too busy with work, life, family, business to find the best stocks, or maybe you're just sick of hunting around social media. Maybe my work will be a good fit for you. But if you are still here, like I said at the start, please do hit the like button and have a wonderful weekend. Thank you very much for watching, and I hope to welcome you soon. Thanks very much.